What's going on, guys? I want to talk a bit about in terms of how to use Fibonacci's for trading stocks, forex, futures. So theory is really the same, but I want to talk about what really Fibonacci is. Fibonacci retracement is a popular tool used among technical traders, which is to try to find out where the so-called support or resistance is, right? So the key ratios that we really consider is the 23.6, 38.2, 50, 61.8, and so on. Now, what it really means, all this hoopla, is best is to take a look at the charts. So first off, let's pull up any of the chart on here. Let's put on charts, right? Chart, and let's click on the daily time frame. Let's do 5-year monthly. Okay. So here's a chart that we see on here for this Apple, right? Let me try to see if I can print out another chart. Okay, let's use this chart. It's a lot easier. All right. So let's see if we have an Apple chart on here. Let me pull up a monthly chart. So what Fibonacci retracements really is, trying to find where is the turn, right? If there's a trending market, we want to see where is it, can the stock potentially turn. So first of all, we definitely want to see whether the stock is trending or not, right? If you go from screen from left to right, you can see there was a trend on the upside. Now the only question you really have to see is where is, if you're looking for a pullback, you have to see where the turn is. Let me try to use this on a different time frame. Customize list, edit, so add a time frame. So 20 years is really the maximum we can go. Okay, so this is really a 20 years. 20-year weekly. Okay, so this is a weekly chart on here, right? So first thing first, we want to take a look at whether is there a trend. I'm not sure where did this chart go again. Okay, so here's a weekly chart. So we are looking, if we try to figure out in terms of, where the support and resistance is, we definitely want to take a look at the Fibonacci retracements. Is a good idea of where there's a potential turn. Now keep in mind it doesn't give you the exact nature of when it's going to happen, but it's a good measure, right? So let's take a look at this over here, right? So bigger picture, let's pull out let's say a 5-year monthly chart. Sure why this 5-year monthly chart is looking like this, but let's say we're looking at the weekly chart, right? Okay, so the Fibonacci's are really drawn from the swing low to swing high, right? Now, what does it really swing low means? The swing low, for example, this is a part of a swing low, this is part of a swing low, this is a swing high, right? Now, let's say we are doing this region and we want to see, hey, you know what? We see this upside move in the stock. Now, where is the potential turn? So we want to take a look at drawing tools. Let me pull up the Fibonacci's on here. Fibonacci fans, time extensions, retracements. So you want to take a look at the swing high to swing low. So this is really in terms of the first swing low, and this is a swing high, right? So you want to try to draw this from the swing low to swing high, right? So this is the up move that you see, right? Generally, the turns happen at 38.2 or 50%. If it's too deep of a correction, then that means is really there might not be a turn. That might be the stock might actually be reversing the direction of the trend. But if you see a uptrend and if you want to find a retracement, then this is a way to measure it, right? Once the stock comes to 38.2, it did hold, and then you have these buying pattern over here. It did go down, move sideways. A good entry would be over here, stop down here below, right? And you try to play the move on the upside. Let me try to see any other recent stocks. So let's say we talk about Nvidia, right? So we're looking at this Nvidia and we try to see, hey, you know what? This stock is in a nice uptrend. If we are looking at the weekly chart, we want to see, hey, where is the potential turn can happen, right? So the low is down here, and we are looking at right, the swing low to swing high. So as long as it's between, I mean, this 23, 38, or even 50 is kind of a pretty deep pullback. As long as the stock holds in these three levels, and if it reverses, then you can just try to find what is a buying pattern, right? This is a nice wedge over here, and then when it breaks, it starts going to the upside, right? So that's one of the examples. Let's try to see Micron. So same theory, swing low to swing high, right? So we see this move and then we see this move, right? So we're trying to see, hey, you know what? Where is the potential retracement? So if you take a look at this one, it kind of holds at the 50%. Now, just because a stock has actually come to these levels doesn't mean that you have to start initiating your trades. You can start legging in, right? So if it pulls in, if you see some kind of reversal pattern, it's a good idea to actually go in. For example, in this way, there's an up move. It came back to 50% retracement. Now you're just trying to find where is the potential for you to get in, right? So if there's a break line trend over here, right? You see the trend line over here. If it breaks, and you already know it has already done 50% retracement, and it went from 46 to 60 bucks, right? That's one way to do it. Let's see another trending stock. Let's see maybe Netflix, right? Right. So here's the Netflix. Once again, if you take a look at swing high, right, swing low to swing high. Once again, it comes to back to this 50% retracement. Easiest way to see it, it has already retraced. Now you want to find a buying pattern, right? Once it breaks out of this consolidation, it's a good idea for it to go long, and then you have this trend. Just trying to see what other stock. Tesla, right? So let's say we're looking at this Tesla, and we see, hey, you know what? This stock is trending. Now, where do you really want to take a look at? Maybe you want to take a look at this part, right? So stock is trending. We want to get in, but we don't know where to get in. You do the retracements from swing low. Swing low. Let me do this. What's going on? Drawing tools, Fibonacci retracements. Okay. So from here to here. So it came back to 50%. Doesn't mean that you have to start initiating the trade. The best is let the stock to move the sideways. Once it breaks the sideways consolidation at 160, you see this up move, right? So this is Fibonacci is really a great tool if you're looking for trending markets. The stock has to trend for you to able to use Fibonacci's. If the stock is going sideways, right? For example, in this sideways market, if you try to draw Fibonacci's, it doesn't mean shit, right? I mean, you're not going to find anything on here to try to tell you what's going on. So you definitely want to take a look at a trending market, right? I mean, you see all this big buying, and then it trends back, and then you have, let's do a few more examples. Let's say the most recent one was FND, right? So you have this pattern over here, right? So this is the swing we are looking at. So this is the first up move, comes back, tests this 3052, goes sideways, and this is a good part to actually go in once it starts breaking up, right? The next one you can take a look at maybe Shopify. Same theory. I mean, the stock went up, right? So you can draw Fibonacci's down here, and just zoom it up over here, right? So the stock trended up, came back to these levels, went sideways. Once it broke this level, it had this up move. If you try to take a look at the other swing, right? So same theory, swing low to swing high, held this retracement at 38.2, went sideways, and once it broke out this, you see this up move, right? So as long as the stock has done a pullback to 38.2 or 50, or right, I mean that's pretty much a pretty good retracement for you to get back. But if it does a deeper pullback, then chances are you don't want to be in the snake, right? So in this one, if you try to see, I mean, you don't really see much of a trend over here, right? I mean, it's more of a sideways chop, so it's kind of hard for you to really get into the stock. The other way you can use it is the reverse, right? So you go from, if you want to find shorting opportunities, so maybe you do it like this, right? So high to low, retraces to 50%, forms a nice pattern, but if you draw a trend line over here, once it breaks the trend line, and then it just drops like a rock, right? Something like VRX is a good measure as well. So you go from swing high to swing low, it retraces to this 23.6. Once it breaks this trend line, I mean, it does flush it again, right? Or if you want to find buying opportunities, you want to do the same thing, right? Let me remove this. So let's say you see this stock trending on the upside and you want to find buying opportunities. Comes over to 38.2, holds, holds, holds. Once it breaks through this range, has a minor pullback, and it goes. So that's one of the easiest way to try to trade Fibonacci's if you are trying to find retracements, right? If you are more of a conservative investor, you don't want to buy the breakout, you would rather buy retracements. Then Fibonacci's, looking at those 38.2, 50, and 20.316 are a really good measure, as long as 61.8 is really deep pullback, which you do not want to see because there's a chance that the stock is actually going to reverse everything that it gave, right? But as long as it's able to hold a 38.2, 50% retracement, that's a decent number to look at, right? Think about it just a particular stock. If a stock has come back 50%, you know what? It's still a good buying opportunity. But if the stock comes back 70, 80%, I mean, do you really want to get into a stock which has gone down that much? I mean, chances are it might actually go down the drain, right? So that's how you use it. Any questions? Give me a like on YouTube and do subscribe for more videos coming up.